Testing, testing. Right. Bob, can you hear me?
Yep, Sarah,
Bob,
I can hear you
hear
fine.
me?
Yep, Sarah, can hear you fine. Can you hear me?
Hello?
Yeah, Sarah, can hear you fine. Hello?
Can anyone hear me?
Yes, Sarah, can hear you fine.
Hello?
Sarah,
Can you hear me?
Yes, I can hear you, Sarah. Sarah, can hear you.
Hello?
Hello?
Can you hear me?
Yeah,
Said my
Sarah,
speaker wasn't working properly. Right. Can you hear me? Hello?
Yeah.
Can anyone hear me?
What's that?
Oh, okay, great. It said my speaker wasn't working. I switched the computer off. Thanks for that.
That's
Right,
okay.
share screen. Let's get going. And first of all, welcome to today's London session. There are 3 sessions. I'm streaming live, and also you can join us on Zoom. So there's 7,000 members in this group. If you're interested in learning to trade with us, you can open an account for just $10, a trading account. And with my business partner, Les, we've been doing this for quite a few years now, consistently. So there are 3 sessions. London's the biggest trading session in the world, followed by New York, and then Tokyo. And we don't trade the Sydney session, but we can go through that. So the first thing that we look at always is our forexfactory.com to look at the news for the day. Just move this out of the way. And you can see today, Friday the 10th, it goes yellow, orange, red. So this afternoon, there is red flag news on the Canadian dollar. We're not trading the Canadian dollar. I usually focus on 5 pairs, a mixture of them. So we're okay to go today. Then we look at the currency strength meter. You can download an app on your phone, currency heat wave. I think it's $10. This is on a computer. I'm trading on a PC, but you can do this on your phone. So I trade a mixture of these 5 currencies. Mostly I trade USD, JPY. I'm not going to do that now because you can see it's only 1 bar. They're both very low movement on those at the moment. They would be either calls, which are buys, or sells, which are puts. The best one at the moment is Australian dollar, which is 6 bars in strength compared to the US dollar. So the base currency, Australian dollar, trading that against the US dollar for calls or buys. Euro and GBP, I don't trade in London session because they're in session pairs. So, and I never trade Euro GBP. That's the most heavily weighted currency pair. They're quite similar currencies, as you can imagine, a bit like Australian dollar and New Zealand dollar. We trade the Forex majors. There's 7 of them. You can look them up, of which one is Australian dollar, US dollar. I don't trade any of these. And then there are various crosses. They're called Forex crosses, but we focus mostly on the majors. So once we've checked that out, then we want to look at the various brokers you can use. We want to look at, let me just, oh, that's it. Look at the payouts. I'm on pocket option, which is 3 minutes fixed time, Australian dollar, US dollar, paying out at 87%. So every time I take a trade using this broker, and you can open an account on this using a card. You don't have to use Bitcoin like or crypto like some of the other brokers. I'll get 3 minutes fixed time. I'm putting $10 on each trade. The strike price, payouts for a call in green. Sorry about that noise. It's the French Air Force. They like coming over here because there's a lot of greenery. And red for a put or a sell. So that's what I want to look at. We have various indicators that we put on. And I like this one because it's got the zigzags. So it tells me if price is going higher or lower. It's picking up the pivots. And then this line here is a 200 exponential moving average. So it's weighting price towards the most recent, and it's measuring the previous 200 bars or candles. So we're coming up to the hour at 11. We know that Australian dollar is a lot stronger than US dollar. If I come over to HourGlass, which is one of the strategies that we use, refresh the screen. So we like to take our trades on the hour, the 15-minute, the 30-minute, and the 45. We've learned from the experts something called market timing strategy, and how pairs and prices move at those particular times. So this is the dollar, saying the dollar is gaining in strength at the moment. So that would not be good for us to take Australian dollar for a call, because it's saying the US dollar is going up. So if that's going up, it will force the Australian dollar down at the moment. So we want that to say that it's a put. Let's go down to the Australian dollar versus the US dollar. This is an algorithm spitting out these trades ideas every 5 minutes. And this says a put, which is what you'd expect against the dollar. So put score of 3 coming up to the hour. We've got the 200 moving average below us saying we should be buying. You can see price has been trending strongly up since the open of London. 64 is the strength on the Australian dollar to US dollar 20. So we wouldn't want to be taking puts, or I personally wouldn't, because it's more risky. But obviously price has to move in waves. It has to keep going up and down. It can't just keep going in one line up or down. So we want to wait. It's 1 minute to the hour. We want to wait for this to come down, find a level, and then carry on up. So now I'm going to come over to something called TradingView. You can open a free account. You can only have 3 indicators on a free account. I've marked this on the hour. I've put that yellow line on, and I'll just show you on the hourly. This is each one of these bars is 1 hour. And within that, we're trading in 5-minute intervals. So there'd be 12 5-minute candles within each one of these. Now that, I'll just move that over. This current bar shows you it opened at 9 AM London, which is the yellow. I've got the PC sessions here. Green is Tokyo, yellow is London. So it's come up off this level. And then I've got some other little lines here, which is another indicator called key levels that we put on. You can see it's just taking that lower level there at 082. And then price is here on TradingView. But the price you really want to note is the one on your broker. It's just gone up to 091 on the hour. This is the hour. Against your HourGlass price 081, so that we're looking, because you will win or lose your trades on the broker, so that's the price that matters. So if we look at just refresh this as you go along, because sometimes it's been a little bit glitchy as they've been doing upgrades. You can see this little probe here, and it's just come off that red line, so it's trying to reach up, but it's still stalling out at this level. Now with these strong pairs, they're a bit like oil tankers. They could, and USD JPY is the same. They can shoot on through on the on those quarters, particularly the hour and the half hour, and then turn at 35 or 40 minutes past or 5 past. And that's because they're so strongly traded. They're what's called volatile. They're faster pairs because there's more trading going on in the market, even though Australian dollar and US dollar is what we call an out of session pair. It's Australian dollar belongs to the Tokyo session, and the US dollar obviously belongs to the New York session. So that's why we don't trade euro on the London sessions, because there's just too much movement in it, and you can get very big candles going one way or the other. Not to say you can't get big candles on Australian dollar, US dollar, you can, but generally I'd quite like the what I call out of session pairs. So here you can see the timer on this current 5-minute idea. I'm waiting for the 5 past now because I only want to take a call, and I can see it struggling at this point. It's not really picked up a major level. It's got 2 minutes left to go before the next call out, and if you remember, the Australian dollar is a call still on a 5-minute. It's being measured against a basket of opposing currencies like the euro, Swedish krona. It's about 6 of them. And you can see it's hovering along the green line at the bottom. So I want the dollar to be, you see how it's moved down? It's moved down since London opened. And this red line shows like a ceiling. It's forcing the US dollar down, pressurizing it down because it's previous. We always look left to see what's going to happen right. We can't predict things, but we can make some quite successful summaries and calculations as to what we want to do. So based on these indicators. So that red line shows the pressure has been on the US dollar, surfed down the Bollinger Band all morning, and it's just leveled out here. So it's trying to do, it's done a break. You know, ideally we'd like it up to that midline and then come on down because it's sat in the middle. So things are a little bit slow just at the moment. And we certainly want the dollar to be a put. It's just hovering there. So we want this to carry on down. It might not come back up to that midline because it's drawn another red line there. So it is giving us a put. So let's pop back down 4 minutes past and see what the Australian dollar says a call on that previous one. See how it's dropped down though. So it's just it'll be because it's struggling on a level that it's found, and it's got to break through something. That's so we'll go and look at that 0.66. I want that down lower, so I might be looking at 15 minutes now for my 15 minutes past. But I can see it's surfed up. It's carried on up. It didn't do a break all the way, retest back to the midline. It found a higher level, so it's still trending up strongly. And we've got that 200 moving average and the currency strength meter supporting us in our decisions. So I want to be patient, and I only want to take a call. Ideally, I'd like, these are called momentum indicators, to come down to the green line because that gives me, it's like a ski jump, gives me the strongest point of liftoff to come on up. So it might not get down that far because it's just carrying on up. But what we can do is go over and look at our trading view, which is this. And you see at that 0, it's at 0.071. So it's just, that's on the hourly. So if I look on the 15-minute, this blue line here is that 200 moving average. It's come up past a very strong line of support and resistance at 74,000, whole number. I'm on the 15 minutes, so each one of these candles is 15 minutes. So there was our 9 a.m., 9:15 UK time, because I'm at Paris, so I'm an hour ahead, 9:30, and there's our 10 o'clock, sorry, 10:30, 9:30, 9:45. And here we are at the 10 a.m., which is the start of where we like to trade on London, because there's too much. This is close of Tokyo, so it settles down now into just the London session. And this is why it's stalled out at this area, because it's found that line at 0.83. And I'll come to the 5-minute, which is where we like to trade, and see what lines are coming up. And I can see it's opened at that 0.66 as a buy, a blue candle. My red ones for the seller are green for puts and blue for buys. So I've put on something called the key levels, and that's picking up dailies and hourlies. So I've got an hourly level down there, and these ones are the lower time frames. So if I look at the back at the 15-minute, it had that level there, did a strong, what we call a bullish, bull for when it's going up and bear for going down. So a bullish engulfing candle to that line at 0.82, and it's just coming back down a little bit to find its way through. And there's that very strong trend up since 8 a.m. in London. Can you see how it will make the waves? So it's done some candles up, then it's struggled to get past this hourly line. The longer time frames are stronger lines of support and resistance. So tried to probe up and it managed it at the 45-minute past up to the next strong line, which is this orange one, 1,000 whole number. So very strong line of to punch through. It managed to get through that. Little bit of a retest back. So it's doing its wave and we want to see it carry on up. So if I come back to the hourly, show you why it's struggling at that 0.83. It's found that level there. If I just show you back here, because what price likes to do is find its previous levels. So as you learn along with us, you'll notice these formations and these patterns. This is on the hourly, which doesn't really affect our trading, except to say that we can see that it has to balance out all this imbalance here, these two big green candles coming down. So at some point, we don't know exactly when, price will want to put the buyers back in where the sellers have been here, because it's like weighing scales. The market always has to balance, and every time it makes a move, it causes an imbalance somewhere else, but it always has to even out. And once these candles have printed, this is on an hour, then that's it, set in time forever. So the indicators pick up what the previous readings have been and tell us the pattern that price has formed, because it's all based on something called Fibonacci and you know, sort of a science of the movements in the market, and you'll get to learn how to read those patterns and the candles. So I'm going to come back down to our 5-minute, because we know from the currency strength meter and the shape of what's been happening, and as it finds these levels to break through, we know what the Australian dollar is doing. Now every time, just coming up, I've got 4 minutes to go before my next trade that I might take at 15 minutes past. Every time I come back to the currency strength meter, I like to check it again, because these bars can move. So we can see we've still got a very strong Australian dollar to US dollar, no change there. So don't rush your trades. We don't need to rush our trades. What we need to do is, sorry, my computer's just a bit slow reloading, is to just wait patiently in between having put our lines on, made our analysis, and just look at each of those quarter of an hour increments for our trading. Sorry, just a bit slow reloading the page. I decided to reload the page. Sometimes it's been glitching a bit when it's been doing the updates. I don't know why it's so slow. Close that one down. Oh, my hourglass is that's it. Just close down one of the other windows. Close that down. So the dollar's come back to being a call again 3 minutes ago. Now this is good. Can you see it's now come up to this midline? These are called Bollinger Bands. If you had a house with children in, these would be like the garden walls, and the kids or the price run out to the garden walls and they like to come back to the house. And the midline, if you think of that as the house, it's a place where price rests. As it's the US dollar, I believe that it will not break through this and carry on up. There's downward pressure because of this red 200 moving average telling us that. So this is its retest back to that line before it drops, which is good for us to say that we want to take a call, a buy on the Australian dollar at the 15 minutes. Now I might not take that trade at the 15 minute, I might wait for the half past. So here is our Australian dollar against the US dollar. You see up here, minutes, 5-minute time scale, same time scale. We can see it has bottomed out on the momentum indicator here, this one. It's a black line here. which is the, oh, I don't know why this is so slow, it's called the stochastic. We have the settings here. So we have 70, it should be 70 or 80 for over bought, and 30 or 20 for oversold. Some traders use slightly different settings. Now this one is the relative strength index, which is another momentum indicator, very sensitive, and it's just not touched, it's not tapped the bottom yet. So I need it really to tap the bottom before I decide I want to take a call, even though you know, these are algorithms. So even though the algorithm, it's only a call score of 2 anyway, and we only like to take 3 or above. So the move may well happen, but for, you know, it's your money once you come off demo into a real account. So why would you want to risk it when you can just wait patiently, go and get a cup of coffee, look for the setup, look for the market timing strategy. Evan Cabral, very, very successful educator. You know, I've learned the hour and the half hour is best. And if I take this trade now when the RSI is sat between the red and the green, and it hasn't even tapped the bottom, then I am putting more risk into my trade, because it's telling me that price, the Australian dollar, may still want to drop a bit more, and it's only 15 minutes past. So I know from this major pair, from trading it, that it can carry on to the half hour before making its turn. I was watching it this morning and discussing it with Les and sending him over some little screen grabs of some chart analysis that I'd done that showed how it was moving. And I can see it from my armchair over there. I've taken off my screen save. So often I'll leave the Australian dollar, US dollar on the screen, and I'll just watch the pattern as it moves from my armchair, even if I'm not trading. And if I see it's move to a big level, I'll come back over and look at the time and see what the major level is. And more often than not, you know, it works to these major levels. It's a major currency. It likes to find major levels as its lines of support or resistance. So it's now coming up to the quarter past. It's 30 seconds to go. There's our timer. I'm not so keen, I don't think, on taking this half past one. I'm going to come here and look. I'm on the 5 minute on my trading view, and I can see a pivot level there, which was resistance before. So that is a good level, 0.53, and it's off that mid candle close channel. So we could assume that we've got a channel between 0.47 up to 0.83 to take a call, but it's not much of a and you can see it's right at the bottom here. Again, these are the momentum indicators, and that's not even at the midline. So I want those blue and orange lines to be parallel, but running the other way. And I can see that, you know, it could well move up from here. But as I say, this pair likes to find major levels, and it could well carry on for the half hour, particularly back to this whole number level before moving on up for the hour. So I'm just going to show you on the 1 minute, and on the 1 minute, it is on that candle close channel, and it's wicked off it. It does, this is only the 1 minute, remember, and I get in for 3 minute trades. It's off the midline. I've got the 200 moving average, and it does say hidden bull, but it's your risk on your money if you're taking these trades. I'm probably going to wait for the half hour because I've got a line there at 0.42 as well. And I'm not so keen on the 15 minute and the 45 as I am on the hour and half hour when I'm trading Australian dollar, US dollar, and I'm prepared to be patient because you can make your daily percentage. Now I'm back on the 5 minutes, it's bottomed out. It is off this level here, 0.53, 0.57. It pushed down, probed up. It's a bit of a indecision there. Let's look on HourGlass. It does say call at 0.48, and it's a call score of 4. So that's your decision if you want to take this trade. What I found at the 15 minutes is it can often push on through, come down to that 0.20 level, where this previous line of support is back at that whole number. I'll just mark it for you. Very significant number for price to like, and it is a big strong currency. So it looks quite a way away, but it's not in terms of this currency. Just put orange on. So that's that line there. So price came, broke up through, retested it. It's broken up, made higher levels, but it's come back to the midline, which is very near to that line, 1.5 pips away from that line, which is a very important line for this price. And you can see the RSI is nearly down near the green and the stochastic has bottomed out. But if you'd taken this trade at 15 minutes past and it called it at 5.3, you can see price is at 0.43. And that's what I mean. It's the strength in the currency. And this currency likes to drop to find or rise to find major levels. In this case, this orange line as a major level, or it could be this midline. It's just 0.47 to come back and see here. And there is that. I'm on the 5 minute 0.53 and it called it at 0.48. So it doesn't make this algorithm, it doesn't make this indicator, these trade ideas wrong. It's just price. It's an imprecise science in the opinion that there it goes, in the opinion that you have to learn which are the major pairs, how fast they move, how they like to move, and use this to validate your decision and not rush into trades. So you don't have to rush in and just click on it because it tells you here. It can only give you, price will do what price will do. It can only give you some help and indication. Certainly I found when it wasn't working so well, when they were doing an upgrade to version 3, I really missed having it. I like to use my levels, the levels that we use, and I like to use cashtrap as confirmation, and I really miss it if it isn't there. So again, here's some imbalance here from price having moved up. We talked about the previous imbalance on the other side, that price was moving up, but here we have imbalance the other way, that price has to sort this out at some point, and it hasn't done that yet. So there's that 15-minute trade. It's hovering around that level that it called it at, and this is why I'm not so keen on the 15-minute or the 45. I'd rather wait to see the major level that a currency like this finds for the half hour. So I'll just put on the half hour line there, and we're at 20 past now, so it's at 5.3. So if you had taken that trade, you would have probably lost it, and we are time-based traders, so that's why I don't like the 15-minute on such a strong pair like this. Now you can see the sorry, my little symbols flash up as my cursor, but the relative strength index, if you look at the bottom black line, you'll see it is now tapping that green lower level, which means it is bottoming out, which is what we wanted. So I'm prepared to wait for the half past on this trade. It did give that line of support at that 0.46, but as I've said, because it's such a strong currency pair, it's like an oil tanker, and it does like the major levels, which is why I've put this whole number back on again in orange, so you can see. But there is also that line at 0.20, round about there, 0.24 now, which is this midline on the Bollinger Bands. And if you look on here, that would be round about that level there, which is where you see price used it as a resistance, broke through, and then it became support. So that's that midline on the Bollinger Bands. I'm on the 5-minute here. So I've got that level to look for, the 0.24, and back down on the half hour for this major whole number. So let's see what it's going to do for the half hour, and check back on our currency strength meter while we're waiting. And it's still 6 bars to 1 bar on the US dollar. I do not want to be taking puts. Let's look back up and see what the dollar is doing. 5-minute increments as well. So the dollar is a put score of 2, so it's still hovering in the middle. So we want that to remain saying puts or sells on the dollar, because if the US dollar goes down, then that means the Australian dollar is being bought, or calls, it's being bought as the base currency against the US dollar. It's getting stronger. So we want this to carry on saying puts on the dollar as we come up to the half hour. And as I say, on my broker, it's been paying out at 87%. So when you get the higher payouts, obviously the broker's earning that 13% difference. And if I'm buying, taking calls, then there's someone in the world somewhere taking a sell or a put and losing that trade. And the broker is placing the trades on the market for us, and therefore they're earning their commission. So when you get the lower payouts, and we don't trade below 70% payout because it's too much to make back up. So for example, for simple maths, if you took a trade at only 50%, which we would never do, and you lost it, you'd have to make up 3 trades to get back into profit. And there's just no point in doing that. But obviously the broker does the lower payouts where there's more chance of winning the trade. But if you lose, then it's more painful. So we don't do that. So coming up to the 25 past, you can see the clock here, 1 minute 12 left. US dollar, Australian dollar, US dollar, 5 minutes left. It's just before the half hour. You can see it is coming down to our 0.24 level. It's on that previous line, that pivot, that line of support, now at 0.34, 0.40. But I want to wait patiently for the half hour. I like the way my 2 black lines on my momentum indicators are now down at the green. So that shows me price is now bottoming out, getting ready to take a call. As I've said, because of the strength in the currency meter, I do not want to personally take puts. I'm only waiting for a call. So let's look visually at what's happened during London. Australian dollar has surfed up the Bollinger Band, and it's come back to do a retest here because it has to find support in order to carry on its momentum, carry on its way. Price will, on any pair, will always move in waves, and we have the 200 moving average showing us green. That it's trending upwards over the measuring 200 of these 5-minute bars. And here we can see Australian dollar 60 to 26 on the US dollar. It's just given us a call at 0.33, call score of 3. So we do like a 3 or above, but as it's 25 past, personally, I'm waiting for the half past, because what I've learned with this pair is it's such a strong pair that it can carry on down. It may not, but I wouldn't take one myself at 25 past, even though it's bottomed out. I mean, it is a bit imprecise. Sometimes the moves can happen a little bit before, a little bit after, but personally, I wait on this pair for about 31, 32, 33 minutes past, because I don't like to take trades, particularly at 28 or 29 minutes past the hour. And if I'm at 25 past, personally, I wait. Because as I say, it's a very strong pair. Now it's off that midline, which is very attractive to me. We just discussed this line being at about 0. It was at 0.20, then it moved up to 0.23, 0.24. That's a very attractive point, along with that green line of support to take a trade. It's just I've learned to exercise patience, even if I miss the trade, because it's not pleasant when it goes wrong and carries on for the half hour to find its level. And I've learned that off, as I say, we've learned that off. He's such a highly successful trader, Evan Cabral. He said he doesn't have a lot of people's stories, which is they've taken a small amount of money, blown accounts, and then made a lot of money. He took a large sum of money and he's made it even larger. And believe me, it's a large sum of money. And he taught us this market timing strategy, which is to wait for the 30 minutes. So why would I not want to listen to someone so successful who's taken many, many, many thousands of trades over the last, I don't think he's been doing it more than 3 years. There you are, you see it's gone red at the moment, 030, and it's just the strength of a pair like this. It doesn't make this algorithm wrong. It's just to do with the hedge funds, the market makers and movers and shakers, and the big boys who are driving the markets. It's where and how they place their orders mathematically using their own artificial intelligence, because they're placing such huge sums of money. They use computers, and so they have to use, they love a level. Look at this level 74000. That's massively powerful to the people who are making the markets, and I'm not prepared to take it off that midline when it's so near this big level until I get to the half hour. So it's all to do with their millions and millions and billions of dollars of trades that they're putting on, and how it's not one chap in an office sitting pressing a few buttons. I mean, there are people who are in these banks who are paid to place volumes of trades each day, but they are using a massive amount of computer intelligence and algorithms and finding levels where they will place their orders. But this is the sort of thing you'll pick up over time. All you need to know at this juncture, if you're starting off with us, is to look for, we want all the greens. So we want a green moving average, we want currency strength in our favor, we want the half hour, we want price below the green line, sorry, the momentum indicators below the green line, ticking up like a tick, going up to show the momentum's then in the move. And we want to wait for the half hour, and I've got 2 minutes to go. Price is at 028, because it can suddenly make a big candle if it wants to. This sort of pair will do that, or it may stay at this level, but I'm prepared to wait. It's dropped slightly, so it was a call at 033. So if you had taken that at the 25 past when it all looked quite good, you would be losing that trade at the moment. And this is why we wait patiently. And it's greed that's the killer of a lot of retail traders. It's patience. Put the TV on, put the radio on, go make a cup of coffee, do your analysis, sit and decide what pair you're looking at, 1 or 2 pairs, decide on the time of day. We know the best times of day to trade, and follow the discipline and the rules. Because if I'd gone in on that 25 past, however attractive it looked, experience and the big traders, and Les, who I know is on the call, have taught me to wait. So I'm going to come over to TradingView to show you. I'm on 5 minutes. There's our half hour, 1 minute to go. It's just on that candle close. And you see how that candle now, 27, come down to the 1 minute. And it is off that blue line of support now at 027. And here we are on the half hour. Let's see what you might be taking this trade. I'm talking, I've got 18 seconds left to go. And I don't always rush into it. It's a call score of 5, called at, so we'll give this one a go. I sometimes wait on the pair like this because it's 021, 021, 021, 024, 21. Now, sometimes I've found with this pair that it's best to wait till 31 minutes past, or there we are, it's just dropped below. Just a little bit longer, because yeah, so I've done it again because it's such a strong pair. So I've got in exactly at 30 seconds past the half hour, but I have learned from experience it's sometimes best to wait. I could have taken another position down there, by the way, but I forgot. So it's a call at 021. It's a call score of 6. The momentum is it's just turning. That's what I mean about it's a bit like an oil tanker. And I think it just tapped. I don't know if I can move that. I think it did just tap that. Nearly, it tried to tap that whole number again. It's at 013. It called it at 021. That's what I found with this pair. So I might take another entry in a minute. Let's look on there. Just bottoming out there. It didn't get, it got down at 1 pip, which we do consider a touch. It got down at 1.1 pips away from the whole number, and it is now making its move. I'll just put it back on the 5 minute for you. You can see that wick off that level there. So let's see where we are, 022, and I've got 2 minutes left in the trade for this to pop up. And as it pops up, now I'm 3 minutes fixed time. If you're on another broker, you may have rollover. We can explain more about that later. So it's just hovering at my entry point. I really must make a note to myself to wait a little bit. You see, that was nearly at 1 minute 31. The 31, I have found that before, 31, 32, 33, because it's such a strong pair. So we're now in profit. I won't take another trade after this. I've done this analysis for you. I'll be on this afternoon. New York session is my next trading time, 2 till 4 p.m. UK time. So if you want to learn how to do this with us, you can come on the Zoom, you can ask questions. Les and I, Les is on the call, have been doing this. Les a lot longer than me. I think he started 2009, originally trading. I only started 2018 with the same company, and I've been in consistently since May 2018. So we can answer your questions. We can show you what we've learned, some of it the hard way, and how to hopefully, you know, we all have different journeys. We all have work or different commitments at home, different ambitions and goals, and you know, everyone's journey is their own, but we can certainly hopefully compress and answer questions. But there's a wonderful academy that we belong to, some fantastic educators there. So we're now at 029. I entered here, I've got 17 seconds left in the trade, and I entered at 023. And I'm going to clear that comfortably as it moves on up. And we work to percentages of accounts. I've done this for teaching purposes, but you can grow your account. We've got a very good withdrawal compounding spreadsheet Les created for us that we use. And that has won comfortably. That's just clicked. And there's my $18 returned at 81% on a $10 trade, and get your original stake back. So that's there's price moving up there, which is why we didn't take the 25 past one. And if you're trade, I do really like Australian dollar, US dollar. And I've just learned, you see, it just loves to come down to a major level. It's such a strong pair. And it was 1.1 pip away from that whole number. And that is considered a touch in Forex terms. Now, remember, this is binary. This is high frequency trading, binary options, in or out. We're scalpers and we're time-based traders. But the anomaly, I don't know what the word is, contradiction, is that you have to exercise a lot of patience in this very quick strategy. So you have to have a very disciplined brain, and you have to learn that discipline and exercise that patience. So I hope that's been helpful. Just look in the chat. Sarah, I can hear you. Cleared. Well done. Cleared. Oh, great, Mark. That's brilliant. Brilliant. Well done. So thank you for joining, because time's our most important asset, and I really do appreciate your time. I hope you've learned something off me and enjoyed trading along with me. I'll be back for my next session on Tuesday. And Les, we've got our harmonic scanner session. I think that's tonight, and we do one on Sunday as well, which Les will be hosting. So great to see you all, and see you soon. Thanks for joining.